So in today's video, I want to talk to you guys quickly about how to invest your first $100, and I'm also going to give you guys 5 investing strategies, and I'm going to explain all of them for you in this coming up video. I was going to make this video on how to make passive income, but I'm actually going to save that until the next video. So if you're looking forward to that, then you can look forward to next week's video. So one of the most important things that you can do with your money is to pay down all of your high interest debt first before you actually start investing. So basically, if you have any interest rates that might be above, like let's say 5%, hell, even 3% really, you probably should pay them all the way down before you start putting all of your money into, like let's say real estate or stocks, because you're going to end up paying more in interest if you let like a high interest account go on longer. So paying down that interest first is going to be the quickest way for you to actually make more money. So doing this will actually allow you to save even more on your income quicker because of your high interest rates. Like I said, if you have a car payment or something like that paid off, not only is it going to help you save money, but it's also going to help your credit score. So since this helps your credit score, that in turn is going to help make you look more financially responsible. Let's say if you're going to go apply for a loan or rent an apartment or buy a car or anything like that, it's going to make you look like a more financially responsible individual, which is exactly who banks want to lend to. Basically what I'm trying to say is that banks aren't going to give money to people that they don't think are financially literate or are going to actually pay them back. So if you're able to show the banks that you have a good reputable credit score, that you pay off all of your accounts on time, then you are going to be looking like a good financially responsible candidate. So my number 2 is actually going to come in at financial literature, like books, magazines, or online subscriptions. Hell, even something like Robinhood Gold is going to be something considered financial literature. Now, doing your own due diligence is one of the most extremely important parts in understanding how the market works and how it will react to changes in the market. Whether that means, the Fed is printing off endless money, or let's say someone tweets something and the market's just completely changed. Doing your own due diligence is going to help you understand why the markets react that way, why they swing up and why they swing down. So doing your own due diligence and investing in something like a book is probably going to be the best way for you to learn how to invest your money. So I have a really great book with me right now that's actually from this library called Rich Dad, Poor Dad. If you haven't read this book, then I would highly recommend it. It basically goes over and teaches all the things that the rich people teach their kids so that they will be able to in turn make passive income and make their money work for them. That's really the whole basis of the book. And this is a really great place for you to start if you're just starting out your financial journey. So when choosing how to invest your first $100, if you've already exhausted the first 2, you've done your due diligence and read, and you actually paid down all of your credit card debt or any high interest loans, then the third thing you're going to want to do is invest into either an exchange traded fund, which is an ETF, or a REIT, which is a real estate investment trust. All that basically means is that you have a basket of stocks that are actually from that sector. So if you have a REIT, it's going to be a bunch of real estate stocks. If you have an ETF, it's going to be a bunch of stocks from that sector, whether it's healthcare, technology, electronics or anything like that. They're all going to be from that same sector. So why would you want to go with ETFs and REITs? Well, it's the easiest way to broaden your exposure to a bunch of stocks. Like I said, you want to remember the basket with a least amount of capital risk. So this will allow your money to earn dividends and grow while, like I said, having a very low amount of risk because you divided your money into little portions like stock slices. I know you guys probably have seen the commercials for like SoFi or M1 Finance where you see how they have their investing pies and they have a bunch of little companies in it, and then you invest like let's say $50 and then you have a small section of all those companies. Well, that's exactly how an ETF or a REIT works. You're essentially just dividing your money up into smaller slices so that money will work for you and not be as risky as just going all in on one stock. So my 4th way to invest $100 is going to be something that's not usually recommended, but $100 isn't a whole lot of capital to initially start with, and I understand that. For someone that's younger than probably 18, $100 is going to be a lot of money to you, unless you're spending it on something expensive. But if you're someone that has to pay bills, you're going to realize $100 goes away pretty quick. Hell, even $1,000 doesn't really last that long if you're paying bills. But you do want to have capital to start with. The whole point is to put aside some money, just a little bit to start with, or some people do the 3% method, some people do 10%, 15%. Personally, I try to save over 50% of my income just so I will be able to retire earlier. That's the whole point in me saving my money. I just really want to be able to earn passive income, have income streams, and then be able to retire early. So like I said, if you're not really confident with investing, like let's say $100 or even a few $100s, I would take that money and put it into a high interest savings account. Now, the reason I would do that is because that's going to be the easiest way for you to make some money, not a lot on your money, but with absolutely no risk. You're guaranteed that interest rate. If it's 1%, 2%, 3%, as long as interest rates don't fall or rise, hell, if they rise, you're going to make more money. But if they fall, you're going to lose a slight amount. But you are pretty much guaranteed that 1%, 2%, however it is. If you go with something like Robinhood and you have their cash management account, you can actually get monthly interest on your debit card, which, I mean, I only had like $30 in my account, but I got a few cents, and that's a few cents that I didn't have before. So last but not least, my fifth way to invest your first $100 is going to be to actually make your own YouTube channel. Now, this can be a great way for you to make another income stream, but only if you are the special type of person that can be a YouTuber. Now, what do I mean when I say that if you're the special type of person that can be a YouTuber? Well, I mean that you enjoy sitting in front of a camera, probably for long periods of time like I'm doing right now, talking to you, or you're going to be talking to yourself, which once again for a long period of time, and then editing videos for hours on end. It's very easy to make a YouTube video. Anybody can just press record, but the quality is the hard part. You want to have your own research and you want to have reliable and useful content. Dedication is the key, guys, and you really just have to stick with it. You're not going to see success overnight, even I know that, but you will eventually see something if you stick with it. So guys, that about does it. If you made it this far in the video, please drop a like and a comment down below. If you have any suggestions for my next video, just drop those in the comments as well. I usually go over every single comment that I can, and personally I will reply to every single one as well that I can. Thank you guys for watching, and I'll see you guys in the next one.